Welcome to Sev's podcast. This podcast is on all things ADU, and each week I will have different guests who will come on the show and talk about different strategies that are working in their market. This is a great podcast for anyone who's wanting to get started with their ADU journey, whether you're a beginner, advanced, or you're scaling this strategy. I really look forward to exchanging energies with you and bringing you value each week. So if this sounds like something you'd be interested in, please make sure to like, subscribe, and share with someone who you know. Now, enjoy this episode. Hi, everyone. Welcome to another episode of Steph's podcast. As you guys know, every single week we have different guests talking about different strategies on all things real estate, a lot of it around ADUs, as you guys know. And today we have a very special guest. His name is David Evans, and we're going to be talking about real estate investment and property management. And the title of this podcast is the Apartment Investors Playbook. A little bit about David is he's a seasoned expert in LA in apartment investments and founder of Investment Property Advisors, as he shares insider knowledge and practical advice for landlords and property investors navigating the complexities of today's markets. With a proven track record of 50 million in transactions, obviously him and his team have been able to accomplish that. And I'll stop there, because I think from there you can kind of take lead and really go over how you even tapped into this space. I think it's always cool to share with people how you ended up in the apartment space, and then we can tap into the rest. Thank you, David.
Yeah, so thanks for having me. Yeah, so I guess my intro to the space was being a landlord for 3 years. So prior to moving to Southern California in 2020, I owned a multifamily back in my home city of Chicago for 3 years and pretty much dealt with everything you could deal with being a first-time multifamily owner operator. So that's kind of what my intro to the space was.
Yeah, awesome. I mean that'll show you a lot and teach you a lot, right? Having to do it yourself. So from there, how did you start thinking maybe I should actually look into scaling this and running a business and helping others with their portfolios?
Well, yeah. Prior to even the space that I'm in now as a residential broker, and that's kind of also what led me into apartment investing. And then in 2020, moved and decided it was important to just focus energies on the commercial real estate. Residential real estate is something that I kind of grew out of, for lack of a better term, and just commercial real estate seemed like it made a little bit more sense. Now, coming from the Midwest, the way the properties transact there is much different. Traditionally, if someone has something and it's not working out for them, they normally sell at a higher velocity rate than here in Southern California, where you have a longer hold and just multi-generational ownership of apartments, and also just a little bit more of a competitive environment than the Chicago market is.
Mm, got
And then
it.
also moving during COVID was also a nice learning curve as well.
Wow. Yeah, I bet that
Mhm.
was its own challenge within challenge. Now,
Yeah.
one of the questions that I had for you was, um, how has your experience as a former investor shaped your approach when helping clients? Because I think as, new investors, which are a lot of the people listening to this podcast, is you don't really put thought into, or even ADUs. One thing and the theme that I'm seeing right now is people want to be a landlord, but they don't understand property management, or they don't understand how to underwrite, or how to do proper maintenance, right, on these properties, how to screen a tenant, how to deal with all these fair housing rules and regulations. So what I'm pretty sure the fact that you're an investor yourself, that has helped your approach with clients. But I'd like to hear what your approach is and how that's helped.
Well, so my approach is more of an education based one. I think that's the most important place to start with.
Mm-hmm.
I think that the reason why you probably see some of the challenges you have is that the commercial real estate or the investment real estate space has been kind of sensationalized, and it's also been made
It
seem
really
much
has.
easier than it actually it is. So I
Mm-hmm.
think it draws more of a a crowd who may not have a lot of experience with the space, but they may have the capital or they may have the intellectual curiosity just based upon the way it's marketed. So I think that's where you have people who come into the space and they don't have an understanding of one, the regulatory environment that they're playing in, which tends to be the most, or at least the second most restrictive one in the country, and they also don't understand what it takes for to manage a property and deal with tenants. And I think that's really the biggest key of successful real estate investing is property management. You can underwrite, in my opinion, you can underwrite a deal bad and you can but stabilize it along the way. But if you go into a property and you don't know how to manage people, that's what you're effectively what you're doing with investment in real
Right.
estate, then you're going to run into a large, some problems along the way.
Got it. So you have like your in-house property management company that's part of.
No, so to be clear, what I do is that my business is primarily based on brokerage, and then I guess what we'll talk about later is that I do have the commercial cleaning business as well.
Okay, awesome. Yeah, I mean, we could definitely touch on that. I'll just ask you one of the other questions and then we can tap into that. And sorry, I was under the weather yesterday, so I'm really pushing through today and tomorrow. What's new, right, in our world? That's another thing. It's like you have to show up regardless of how you feel and what's going on internally and externally. So one of the other questions was, with over 50 million in transactions under your belt, what are some common traits that you see in successful apartment investors, and how can others replicate it? I mean, you touched on a big one, which is management, management of people, management of the property. What are some other traits that you see amongst some of these people?
Okay, well, yeah, no. So just want to make sure I, clarify. So the team total transaction was 50, but one of the things that I've seen in my experience some successful traits is one is grit. I think it's really requires a high level of just stick with itness when you are investing in residential real estate, particularly in markets where where you have lower tenants who are maybe at the lower income of the spectrum,
Right.
and which is most of the properties that are most investors stepping stone into the apartment investing space. So you have to have the flexibility to deal with when there's floods at a building, when there may be when there may be deferred maintenance, when there's calls from tenants at all given times of night, and also in some scenarios, even when you're using third-party management and for whatever reason they're not available, and the tenant reaches directly out to you. And that takes into your earlier point, if you're whether you're sick or whether you're traveling, those calls still come in, and you have to be
Exactly.
able to respond to them quickly because the more proactive you are in response, the more you'll have tenants or a better relationship with your tenants, which tends to determine everything else. It tends to determine how fast you are paid when rent is due. Tends to determine how fast a tenant notifies you when there is an element of deferred maintenance to the property, or when there is someone who's unauthorized being at the property, whether it's another tenant having a long-term guest, or if there's people who are loitering outside of the property. And you want to make sure that you have that relationship with your tenants. So responsiveness is key.
That's such a huge point because I see the same thing. So I work with, I'm the only realtor in a property management company based out of Huntington Beach. So we manage over 700 properties and I handle all of the sales. So constantly, any turnover within the portfolio, I'm like the in-house realtor, right? And so one of the common things that I see is you have landlords who really don't give a shit about the tenants sometimes, and their experience is exactly that, right? Like a lot of issues with either maintenance requests, because if they're not catering to the tenant, they're most likely not also maintaining the property well, which then those two things just kind of collapse, and now they want to sell the property because it's not cash flowing. Whereas I see the other type of mindset, right, with other landlords who really take on almost like a hospitality hat where they really care for the tenant and they sort of set the standard where it's a good experience from the get go for the tenant. And now that just makes it, a much more smoother process. They're most likely going to renew, most likely going to hang out, and pay on time and have very low maintenance. So those are like the little key points, that I think make a huge difference. And it just makes your life as an investor or landlord a lot easier when you really take into consideration the tenants' wants and needs and accommodations and amenities all in one, because they're the ones who really will set the tone, right, as you said, for that long-term play. One of the things that I am curious about is you run both a real estate advisory business and then you also have, as you mentioned, your commercial cleaning company. How do these roles complement each other? I know that for us, we're a property management company and we also have our in-house maintenance team. So we have our contractors, we're also licensed, and that always tends to really help. I always tell my tenants and landlords, like, we're not the cheapest, but the fact that we're able to cater to those 700 doors, the time frame really helps you save time and money because we can get things done quickly since we have in-house people. And so with you, how have you sort of merged or leveraged both of these services together?
You know what? To be honest, the way I've merged it is through leveraging my existing contacts with property management companies. So I
Mm-hmm.
mean, it so and when in the brokerage experience traditionally with your interactions with property management companies is you're bringing them a client, or if you're at a place where the owner is selling, maybe you're the property management company is the point of contact for records,
Right.
and access to the property. But when those scenarios don't exist, being another way to be a resource or value add to a property management company is saying, hey, you know what? I see you have these commercial or you have these residential properties and they need exterior maintenance. So, and that's something that our team.
Mm,
And in some
got it.
scenarios,
Okay.
property management companies may have that service internally, and sometimes they don't.
Mm-hmm.
And what I've
Right.
noticed, and you can kind of correct me, I know your space is more of a residential property management or at least your
Mm-hmm.
company. But what I've noticed is a difference in the way that residential properties are maintained and commercial properties are maintained here in Southern California,
Oh.
particularly in Los Angeles County. So I've noticed the residential properties, I think property management companies tend to be a little bit more intentional because I also understand that the property management for residential is a little bit more of a competitive space where it feels like in the commercial space and where
Mm-hmm.
property management is not as competitive. So
Right.
you have varying levels of quality depending on who's managing a retail property, a strip center, or CVS or a Walgreens. So depending on where you live, it may be immaculate if you live in Orange County. Space may be
Right.
immaculate and clean. If you live in South LA County or if you live in LA, you get out there and it's most likely has been neglected, at least the exterior maintenance.
No, you're absolutely right about that because we mostly have residential, but there's a few small multifamily, and there's one in particular. It's a 266 unit in Santa Ana that we recently took over, and they had their own like in-house property management company, but a lot of deferred maintenance, and they had this company for years, like over 20 something years, but yeah, I mean the maintenance that was needed on that on those units was ridiculous compared to some of these smaller units because as you said, just you have to cater to them differently. But two different strategies. And it was cool to kind of hear how you've been able to merge the two because they really do complement each other well. So
Yeah.
one of the other questions that I had was, what advice would you give to first time investors looking to enter the multifamily housing market?
Partner with someone who's already experienced. That's the main advice I could give. If I could go back, to my experience, in multifamily investing, partnering with someone who's already experienced. It's a very lonely and challenging process to go along. So I would
100.
highly recommend doing your first deal with someone who's already active in the space or experienced in the space.
Yeah, I just did a live on Instagram with one of my good friends. He's a private money lender in San Diego. And one of the things we talked about was just that is experience, especially in today's market. If you're a first time investor, or if you're even wanting to tap into fix and flip in residential or multifamily value add, whatever the case is definitely aligning yourself with somebody who's done it over and over. I mean, we went through so many different case studies and reasons why you should. There's a lot of challenges that come along the way, and people's true character, right? And like the way they run business and their integrity really shows through these deals, and experience is sort of what helps you get to the finish line. So that's a great
Yeah, to piggyback off your second part, the other part of it is, definitely partner with someone who's experienced, but also make sure that person is highly vetted. So kind of as, an analogy to the syndication space, when you're looking to, be a passive investor in the syndication, you always want to make sure that the, limited partner or the sponsor has a good reputation. So even if
exactly.
you're doing a joint venture on your first multifamily investment, get as many recommendations as you can for that person and their track record. Just because they're an experienced investor doesn't mean that they're going to be a good business partner.
100%. Yeah, this is awesome. Is there any other hacks, or actually I do have two questions that I think would help a lot of the listeners. Is one, what is a common challenge that you see in today's market? And then we'll go into like the positive. We'll finish off with the positive stuff so we don't scare people away from from investing.
Yeah, yeah, it's insurance. I mean, that's the biggest one right now. That's the biggest challenge for deals right now to get done. It's the insurance premiums coming back where existing policies may be at 50 cent or $1 per square foot, and a new premium may be two, in some cases, $3 a square foot, and that blowing a hole in people's underwriting or pro formas for what projected cash flow when they plan on
Right.
acquiring a property.
That's a big one. I've definitely seen that just in the last 60 days, right? 90 days or so. What would
Hmm.
you say are some of the benefits? I'd say one of the wins in multifamily right now is the fact that Prop 33 didn't go through, because that would have been a whole different ball game that we'd have to navigate
It
through.
would have been it would have been calamity. It would have definitely been a calamity. It would have probably put us in a more restrictive environment
Right.
compared to like a New York or somewhat similar. But I think one of the interesting things we'll see is how 2025 turn out. Will a lot of investor demand comes back to primary markets like Los Angeles. I think that the Prop 33 looming over people's heads, as well as certain tenant protections, has made things a little bit challenging to transact in LA properly.
Yep. I agree. Which is why, one of the other things that I want to get your take on before we wrap it up is the ADU play. And, how active are you in that space, if at all? And if you're pitching it, or bringing it to your investors' awareness as a strategy. I know one of the bills that just passed, SB 1211, pertains to multifamily, where now you can have up to 8 detached ADUs if there's an existing 8 unit, and so on and so forth, right? But
Mhm.
is that something that you sort of tapped into? And
You know what? So it's definitely a part of my conversations with investor clients,
hmm hmm
prospects, because you're in certain markets like Los Angeles, which are, or even unincorporated LA County, which reaches far into the South Bay, you're limited in what you can charge for existing tenants. So it's building ADUs are not only a way to create additional cash flow, but it's a way to add value to properties. At my prior firm, we had an appraiser practice, and they would share with me
hmm
scenarios where an existing owner was able to add significant value to their properties beyond market value, just based upon what their ADUs were built to, and this were added to the existing structure. So if even if you're an investor and you're planning on a long-term hold, a way to increase your equity is by building ADUs, not only to increase the regular cash flow, but the value of the property overall.
yeah, it just enhances everything, honestly, which is why I'm a huge advocate. So I love
Yeah,
it.
yeah,
I
and then
think,
I want to. Sorry.
go ahead. Go ahead.
No, I was going to say one of the also things that I've learned from some investor clients in markets where you have that are rent restricted and regulated. Sometimes utilizing ADUs can create a natural turnover and can also make other because the taking away parking in certain areas may make some tenants more motivated to move, and this is also a strategy some of the savvier investors use in markets where they
Right.
have long-term tenants who are paying below market rate rents.
Yeah, that's another hack there that he just dropped. We'll have to clip that and share it with folks. Well, that's awesome. I'm so happy that I had you on here because one of the things I've shifted to is more multifamily guest. Obviously, always talking about the ADU strategy, but just tapping into that space because as you mentioned earlier, I've been doing residential for over 10, 15 years. I don't want to outdate myself, but it's been a minute already. And I'm like, okay, now I feel like I need to challenge myself and just, walk a different path. And I think multifamily with the ADU play is a way to go. So shout out to you for being one of my few. I think you're like my sixth multifamily guest. So that's awesome. I'm
No,
transitioning well. So how can
no,
people connect with you, David, and
yeah.
reach out to you?
So yeah, I wanted to say thanks for having me, and then yeah, they can connect with me through David at investmentpropertyadvisors.com. They can call me. My number is 310-804-3829. I'm also on LinkedIn. You can find me through my name. And then I'm on Instagram at devanscre.com.
Perfect. Awesome. Anything else you want to share with people? Anything else you have coming up or
So currently have a few development projects coming in. Got some small multifamily listings coming up for sale in South LA and Inglewood. And to the people listening, I think the 2025 will be the challenge, will be the test of where investors are come back into the market and to not be concerned of some of the challenges over the past 2 years. Because in challenge there's opportunity, and there's a small group of investors, at least that I'm seeing in my space, where they are taking advantage of that lack of competition. And I
mm,
believe that 2025 can be a boon for real estate investors who are looking to enter the Los Angeles market, where a lot of people have stepped out. So for I think a lot of investors have been waiting for a crash, and a crash is not going to look like it did the last 15 years prior. It
right.
looks in a way where there's kind of a slow erosion of value for existing owners who have been battered over the last 4 years due to the eviction moratorium, due to rent freezes, due to insurance costs increasing. And that creates opportunities for investors to enter the market and acquire properties at yield that they probably haven't seen, at least pre-pandemic. So just, the best way to learn is to kind of step into the market, make sure you have a good partner, a business partner guiding you, but you can't learn without acting.
That's 100% true. A lot of it has to be implemented. You can't just learn forever and not implement, but make sure that who you implement with has, some reps and has some experience. So definitely reach out to either one of us. I mainly work Orange County. Um, you're all over the place, I'm sure, but specifically LA. So feel free to reach out to David, reach out to myself, and make sure you guys share and like and subscribe to this podcast. Thank you
Awesome.
so much, David.
Thank you for having me.
Hey, everyone. Thanks for listening. I hope you found this episode informative and helpful. If you have any questions or comments, please feel free to reach out to me on Instagram or LinkedIn. I'm always happy to chat about ADUs and help you with your journey, whether it's consulting, acquisitions, management, you name it. Just reach out to me and let's schedule a quick call. And lastly, don't forget to subscribe to the podcast so you don't miss any future episodes. I'll be back next week with another great guest and more insights on all things ADU. Thanks again for listening. I'll see you next time.